You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
All right, everybody, that music means it is time once again for what the cool kids are calling OPR, a.k.a. Options Playbook Radio, the program for you, the basic retail options trader. Maybe you're looking to learn a little bit about offense. You want to get a little bit aggressive, maybe some income, some speculation. Well, we got you covered there. Maybe you're getting a little bit skittish at these market levels. Who could blame you out there? You want to play a little bit of defense? We got you covered there as well. My name is Mark Longo from theoptionsinsider.com, as well as, of course, on this fine network upon which so many of you have been mainlining these days. Pleased to see so many new folks continuing to discover not just the network, but OPR out there. It's an important show in these troubled times. We try to provide you a little bit of sanity, a little bit of education, a little bit of enlightenment, maybe a little entertainment out there as well. We try our best. So remember, if you like what you hear, keep those reviews coming in your platform of choice so new folks can continue to discover this program and indeed the network. And of course, if you have questions, comments, we do love to hear from you guys as well. And joining me on the program today, it's actually technically his show. Don't tell him this. He is the options guy himself, Mr. Brian Overby, the senior options analyst over there at Ally Invest. Mr. Overby, welcome back to your own program, sir.
Oh, it's great to be back, Mark. And it's been too long since we've done a huddle up and answered some of these listener questions. So it's always great to hear your voice because I know that means that we're going to take some time and huddle up.
It's time to huddle up and answer questions about your favorite options plays. Submit your questions via twitter.com/options, facebook.com/theoptionsinsider, or questions at theoptionsinsider.com.
All right, everybody, welcome to the huddle, the portion of the program where Brian and I put our heads together, sometimes quite literally, not in the pandemic times these days. We are quite distant, but we put them together to answer your legion of questions here for the program. Before we even get into your questions, let's start with a request we had from the options guy himself. At the end of your last episode, Brian, you were talking about the high flyers these days of Tesla and Apple. And at the end of that, you posited a question for our audience. You said, what do you guys think about what's going to happen to these names post-split? This was as of Thursday's market close out there. So we posed that question and put it to you guys directly. We said, quite frankly, Apple closed that day at 506, Tesla at 2153. They're both coming in on big splits, 4-for-1 and 5-for-1 out there. So we asked you, split adjusted now. Of course, obviously they're going to be numerically lower after the close on Monday, but split adjusted. where will they close after the bell on Monday? Higher or lower? And Brian, I was kind of surprised at the results here because usually our audience, a deeply cynical bunch, they like to fade a lot of things out there. I thought maybe they'd be fading this one, but not so much. They were spot on with this. 57.5%, sir, chiming in and saying, well, both of them are going to be higher. By the way, I should clarify, we gave you 4 choices. Both of them higher, both of them lower, or some mix. Tesla higher, Apple lower, or Tesla lower and Apple higher. And all of you, well, a large majority of you, 57.5%, came swinging for the fences with higher. Turns out that was the right approach. They blew the doors off coming out of their split. Only 18.8% of you said lower. That was number 2. 12.2% saying Tesla would be lower and Apple higher. And almost 12%, 11.6% saying Tesla was higher and Apple would be lower. Brian, this is your bespoke poll. You requested this, sir. So what are your thoughts on our audience? A pretty savvy bunch out there, sir.
Oh, yes, definitely. And I'll give you what my answer was. It's never meant to be a recommendation, but I actually thought Apple would be lower, and I thought Tesla would go higher. And my rationale was the millennials would jump at the opportunity on Tesla, and that Apple being more of it basically is the S&P 500. It seems like it used to track it way back in the day. Now it just continues to go up. But overall, I thought Apple would give off a little after the fact. They're both down today, as a matter of fact. They're both Tesla's actually down more than Apple today. But the answer and the correct answer was was higher, and it was 57.5% of the respondents picked both higher. So our listeners were smarter than I was overall, and what a great little fun little survey to do, because there was so much news around the fact that they were both splitting on that same day overall.
Yeah, our audience, a savvy bunch. We like doing these kinds of polls. So if you cook up any other poll questions for us, Brian, feel free to pass them along, because we like to poll our audience a little bit. By the way, you mentioned Apple being a substantial portion of the S&P. A little nugget came across our Twitter feed recently, which I haven't had a chance to independently verify, but it sounds right, and it's pretty terrifying if that's the case. Apple now has a larger market cap than the entire Russell 2000. Have you seen that one, Brian?
No, I haven't, but I have a couple of those too, so keep going. I did not know that one. That one I have not seen.
Yeah, that's.
I do know that the iPhone is bigger than Microsoft.
The market cap alone, that doesn't surprise me at this point. It's insane.
Yeah, just iPhone sales alone is bigger than Microsoft, and Microsoft was the one that got sued for antitrust.
They were going to break it up a few decades ago, so nothing could stop the juggernaut that was Microsoft. And fast forward a few years, and the iPhone could pretty much do it single-handedly now. So that's the world we live in, Brian.
Yeah.
Since we're talking about Apple, actually, we got a next question here from the creatively named 459. Don't want to get that wrong. 459ST wants to know, how did the Tesla and Apple collars perform after the split? Well, this refers to your last episode, Brian, where you were talking about a collar. I don't think there were double collars going on in there. So what do you have to say here for our friend 459ST?
Yeah, so here's one of the things that I always find interesting when you talk about protection. The example that we kind of focused on a little bit was really Apple, just because in general Apple was it's probably more widely owned overall, just because every single fund across the world, they find a way to try to get Apple into that fund overall. So when you look at these stocks and we're talking about them, I focused on a protective put in Apple. And that means that we were just going to buy a put option, and that gives you unlimited upside. And one of the biggest things that I said is, no matter how many times you say this when you talk about buying protection on underlying stock, and how many different ways you say it, people still think you're bearish on that underlying, no matter how many ways you say it. So I basically, when you're talking about buying a protective put on Apple, and we at that point in time, the option contract that we were saying was a little bit out of the money. And the implied volatility was only around 35%. So now you say only with quotation marks, and since the pandemic, that's a fairly low volatility overall relative to other stocks and what was going on. So I basically was discussing just buying the put, just because you don't know if you want to limit the upside on that collar. But you would be okay, because if you did the collar, we only did 1 week. You were just trying to get through the split, and the stock has ran up, but it's also given some back. So overall, the collar would probably be somewhere in the middle, but the concept was in Apple that you would just buy a protective put. And I even said, when the old car insurance analogy, if you buy car insurance and you don't drive your tree into the car, did you lose money buying car insurance? And that's the best analogy that I can give when it comes to buying protective puts on stocks. You want that underlying stock to go up. So we did talk about Tesla and said, if you were to do Tesla, the implied volatilities were up around 90% on the option contracts that we were looking at. Just a little bit out of the money, and basically said that if you're going to do this on Tesla, it's really hard to just spend that type of money, well over $100. I don't even remember what the number was, just to buy one protective put on your 100 shares. So you'd probably have to collar it. And another thing you can also do is you could just actually buy a long put spread. So I buy the put, go down on Tesla at that point in time, maybe 50, 100 points, and sell another put to help pay for that one. So that's always another one. I didn't mention that on that call. We got a little bit long in the tooth, so I didn't quite get into those two things. But the Apple collar was an actual protective put, and it did all right. It accomplished its job. You made more money by the Apple and the stock run up after the split than you would have made if the underlying went down and you were long a put, because you would have lost more on your Apple shares. So how did it do? It did very well. It did exactly what it was intended to do. It allowed you to stay in your Apple 100 shares of stock was our example, going into the split after that huge run up, just because they announced a split, which does nothing to the fundamentals of the company overall. And so Mark, actually, I meant to say this on that last point that you made. So before the split, if you had the split adjusted price on Apple was 39 cents a share. And if the stock hadn't split, I heard this one little tidbit too. Now, I can't quote the sources. I don't know exactly where they were from, but that Apple would be trading for around $28,000 if it never split.
I was just going to say, yeah, I mean, just in the last few years, they did 7 for 1 not too long ago, and now another 4 for 1 on top of that. So the multiples just in the last 5 or so years are pretty impressive. So you go beyond that. Yeah, it's terrible. It doesn't seem like it was that long ago when I was in college and Apple was circling the bowl down there around, $3 a share, right? And it seemed like they were on life support. And people were arguing maybe just get rid of it. And here we are now. It is literally the most valuable corporation on the planet, more valuable than the entirety of the Russell. That's a good question. That's another good poll question.
Yeah.
There. What would you rather have, Apple or the entirety of the Russell 2000?
Yeah. What small countries could Apple buy?
Yeah, just with cash on hand, they could literally buy.
And one of them would probably be Canada.
You're probably not wrong. That's an upcoming poll question, listeners. Would you rather buy the entirety of the Russell 2000, so you get all those names there, all 2,000 of them, or would you rather have Apple? Interesting things afoot. We got to keep on rolling, though. We could debate Apple and Tesla. Of course, maybe they'll come up in our next question here, Brian. This one comes from Tyson. He wants to know, what are the hot options that people are trading at Ally? I'm going to go out on a limb, Brian, and say maybe they start with T and A. Are those possibly correct, sir?
Oh, yeah, without a doubt. A lot of Tesla and Apple options have been trading. By far, they've been leading the way, especially going into the split. Now, also, you got to pay attention, too. One of the things about the splits is, and I don't know if this has happened to you if you were trading these option contracts. I actually mentioned it in a posting on our community site that, when Apple and Tesla split, sometimes you end up with an odd strike. And that's one thing to be aware of, in that if you end up with a 125.23 strike, something odd because of the way the split all worked out. Those options contracts, you kind of want to get out of them. You kind of want to move on to a different contract overall. So that was a real tough one for us. It was a great job by our operations team to try to get that whole split. You think about how almost everybody, I don't know this number for sure, so I don't want to be quoted on it, but almost everybody had some type of position in one of these stocks in the entire firm. So it adjusted. Every single account had to be adjusted because of that happening. And then when you go into that, you always have, a lot of people speculating on oil contracts, on gold. Those are a couple of hot ones that are on the opposite side of Tesla and Apple, in that the kind of preparing for the worst, where Tesla and Apple are saying we're going to the moon. The gold option contracts, GLD, that is that underlying ETF, we're seeing a lot of volume in that too. So that would be on the opposite side of the hot options, Tesla and Apple overall.
Well, you guys should be commended for that. That's no mean feat out there to deal with these splits. We obviously engage with a lot of different brokerage platforms here on the network, and I played with a few of them after the bell that day, before the bell the next day, during the split period there, to see how they were handling their updates there. And a lot of them were throwing out some very crazy quotes that I knew just could not be correct. So it's a much more challenging logistical lift than you might thought. You just divide by 5, divide by 4. There you go. No, there's a lot more that goes into it there, listeners, and it's a challenging thing. So it sounds like, Brian, you guys and the team over there at Ally, you were ahead of the game when it came to split adjusting, sir.
Well, we did okay. We made it through. We're very happy to see Tuesday. Let's put it that way.
Yeah, you don't want to do that every day, but c'est la vie. Surviving it every now and then is a good thing. Since we're talking about brokers, let's take it home on this one, Brian. Kind of an interesting one. We've been getting some similar things out there. Brokerages and their various requirements or options have been in the news a lot lately. This question comes from Mel. He or she wants to know, they say, weird stuff regarding, we won't name the firm, we'll just say Broker X. Weird stuff regarding Broker X and their update to their options offerings. He or she wanted to know, are brokers allowed to change their requirements for level 1 to 3 options trading? Aren't they standardized? This has been an interesting talking point for us on the network here for a little bit, Brian, because a lot of people, myself included, were under the impression that these were fairly regimented in terms of what they should be. Brokers obviously have some wiggle room here or there, but, changing things wholesale didn't seem like that was in the cards. Yet some of the headlines we're seeing out there lately maybe make that seem like that's a possibility. So from what you guys do over there at Ally, Brian, what are your thoughts here on level 1 through 3? Are they standardized, or how much flexibility do you guys have?
Well, I don't know the exact amount of flexibility, but they are malleable, without a doubt. Every brokerage firm has to assign a person to review the fundamentals, or I should say I'm struggling for the word. The background of the people that are opening up brokerage firms, and they are in charge of setting up these levels for option trading. Now, you'll see a lot of brokerage firms will have a different number of levels. Instead of 1 through 3, as was mentioned here, at Ally, we have 5 different trading levels, and some brokerage firms will have 6, and they'll separate out covered call writing will be the lowest level, and some people even call that level 0, and then buying a call option would be level 1. So implying that selling covered calls and cash secured puts are the lowest level of trading overall. Now, so the simple answer to the question, aren't they standardized, is no, they are not standardized. Now, so although they're not standardized, there are guidelines that brokerage firms need to follow. So you're not going to be too egregious from one broker to the other, but you do have a little bit of flexibility. Now, I personally, when I look at this option trading, one of the things that I would prefer to be able to do is to separate out people that are doing short spreads, selling call and put spreads for a net credit versus buying long spreads and paying a net debit for those accounts. I don't think anybody should really be prevented from buying a long spread at any point in time. I think because as opposed to just buying options outright, you're reducing your risk by selling another option contract. But that's very hard to separate those two in that how do you deal with people legging in and out of trades all the time? So you might say, well, you can only do a debit spread or a long spread when you first start, but what happens when they start adjusting it, and how does that change how your whole operations is done in the end? So overall, the answer is no, they are not standardized, but they definitely have guidelines that they have to follow when they're setting up those different levels.
There you go. Informative stuff, as always, here on the old OPR. Unfortunately, Brian, that music means our huddle for this episode, at least, has come to an end. But before we go, if folks are intrigued, and clearly they are, and they want to reach out to you directly, maybe in between shows, and maybe they want to send in a question for our next Huddle episode, where should they go? What should they do, sir?
Well, obviously, you can always email me directly if you'd like to. Here is the email address, theoptionsguy@invest.li.com. And you can follow me on Twitter. I've been tweeting a lot more, been trying to keep up with Options Insider, that's for sure. And my handle there is @BrianOverby. And lastly, if you'd like to, you can also follow us on our Ally Invest handle, which is Ally Invest. So next time around, please make sure that all the options that you bought finish in the money, and all the ones you sold finish out. Thanks for coming, everyone.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.